In a world where financial uncertainty looms, a prevailing perspective suggests that excessive manipulation of money could trigger a catastrophic collapse of the entire economic system. This dark view is rooted in the belief that relentless money printing might lead to hyperinflation or a complete breakdown. However, it's a challenging proposition to fully embrace this scenario, especially considering historical instances where, in times of crisis, central banks resort to printing money. The privilege of being the world's reserve currency, such as the case with the US dollar, makes hyperinflation a formidable challenge, often resulting in a surge in asset prices instead of a massive downside. A recent financial enthusiast platform, Savvy Finance, acknowledges the concerns about the potential risks associated with excessive money printing. Still, it seeks to engage its audience with an exclusive investment opportunity. The platform invites viewers to become part of their journey by investing in their YouTube channel's potential future revenue. The pitch extends to offering participants a chance to be savvy ambassadors, amplifying the platform's visibility on various social media channels. The constant debasement of fiat currencies is a rallying cry for sound money enthusiasts, investors, and speculators. Many anticipate a collapse of the global monetary system due to central banks' reliance on printing money. Real Vision's CEO, R. Powell, however, provides a dissenting view. Powell believes that the U.S. economy, supported by the world's reserve currency, the dollar, has the resilience to endure and thrive for several more decades. In his perspective, money printing will persist for the next 7 years, addressing demographic and productivity challenges that he identifies as key drivers behind ongoing money printing. Powell delves into the debt problem, noting that major developed economies hit 100% of GDP in debt in 2008. The interest payments on this debt became a critical issue, leading to a cycle of money printing and balance sheet growth. The solution, according to Powell, involves mutualizing these payments across everybody by increasing the balance sheet. However, the challenge persists as GDP isn't growing fast enough, creating a scenario where printing more money exacerbates wealth inequality. In an interview, Powell explores the interplay of technology, crypto, and global economic challenges. He highlights that for individuals, the two assets likely to outperform in such a scenario are technology and crypto. While a collapse is anticipated by some, Powell argues that the central bank's narratives focus on a green energy revolution, aiming to lower the cost of electricity and, in turn, boost productivity for GDP growth. He also emphasizes the importance of population growth and how advancements in technology, particularly AI and robotics, could play a role in sustaining economic expansion. Powell introduces the concept of the exponential age, where various technologies converge to drive unprecedented technological change. He sees this as a potential solution to the macroeconomic challenges of excess debt and slow GDP growth. The exponential age, coupled with the central bank's role in debasing currency, has led Powell to shift his perspective from a focus on mean reversion to anticipating a melt-up. He advocates for aligning investment strategies with the secular trend driven by technology and central banks' actions. Despite the challenges, Powell suggests that there is hope for the global economy. He emphasizes the potential for increased productivity and economic expansion to alleviate the debt burden, allowing for continued monetary easing without severe repercussions. Powell recommends investing in asset classes like cryptocurrencies and technology stocks, which he believes will outperform the rate of currency debasement. What are your thoughts on the perspectives presented in this content? How do you see the role of technology and cryptocurrency in shaping the future of the global economy? Leave a comment above and join the discussion. Powell contends that there is still a high chance for the US and other countries with strong currencies to navigate through economic challenges without facing serious repercussions. While investing remains crucial for wealth preservation and growth, traditional asset classes like bonds might not rise quickly enough to counter inflation. Popular stock indexes, such as the S&P, can help maintain wealth but might not contribute significantly to its growth. In Powell's view, cryptocurrencies and technology stocks emerge as the top choices for investors, as they are expected to outperform the ongoing currency debasement. As the discussion unfolds, Powell touches upon historical instances where globalization efforts, particularly in the 1980s, played a role in delaying the impact of massive debt. He points to technological advances and international transactions becoming quicker and more accessible. The opening of China to foreign businesses further contributed to extending the timeline for addressing the debt issue. Drawing parallels, Powell suggests that if the artificial intelligence revolution unfolds as predicted, there could be another 40 or 50 years of development, potentially avoiding the doomsday scenario many anticipate. Encouragingly, Powell refers to schools of thought, even from Oxford University, suggesting a tipping point where the GDP of the planet could double rapidly. This extreme scenario is tied to the idea of introducing infinite productive units into the economy, creating the potential for infinite goods. Powell acknowledges the uncertainty in this new economic system being built before our eyes, which he terms the exponential age. Technologies ranging from energy to AI, robotics, EV, space, and biotech converge to drive unprecedented change, offering a potential way out of the current economic challenges. In conclusion, while acknowledging the concerns and risks associated with excessive money printing, Powell remains optimistic about the future. He sees a path for the global economy to navigate through challenges, fueled by technological advancements and the strategic role of central banks. The discussion highlights the importance of adapting investment strategies to align with the ongoing secular trend, with cryptocurrencies and technology stocks emerging as key players in this evolving landscape. How do you view the role of globalization in shaping the economic landscape, especially in light of historical instances mentioned by Powell? Share your thoughts and insights in the comments above. Powell underscores the significance of technology in driving economic change and shaping the future. He describes a paradigm shift from a focus on mean reversion to anticipating a melt-up, emphasizing the need to align investment strategies with the ongoing secular trend. Powell's observations highlight the transformative power of technology, evident in the consistent, smooth trends of companies like Amazon, Apple, Google, and Facebook on logarithmic charts. These trends, driven by network adoption models and central banks' debasement, create opportunities for investors in the exponential age. The discussion expands to the potential impact of the exponential age on job markets, with Powell noting the growth of robots in Amazon warehouses and the broader automation trend. The shift towards artificial intelligence poses challenges to traditional job roles, but Powell sees it as a solution to the macroeconomic problems of excess debt and slow GDP growth. He envisions a future where robots and AI contribute significantly to productivity, creating a scenario where population growth can be replaced by the efficiency of machines. Powell introduces the concept of the everything code, emphasizing the interconnectedness of various technologies. He sees this as a fundamental understanding that lifted a veil for him and changed his framework of the world. The exponential age, driven by technological advancements and central banks' actions, offers a potential solution to the prevailing macroeconomic challenges. Powell's optimism lies in the transformative potential of technology, and he encourages investors to position themselves in assets that align with this secular trend. What are your thoughts on the transformative power of technology in shaping the future, as discussed by Powell? How do you see the role of automation and artificial intelligence in the evolving job market? Share your perspectives in the comments above. In the final stretch of the discussion, Powell emphasizes that all hope is not lost, and there's a high chance to navigate through economic challenges with minimal repercussions. However, he underscores the importance of investing for wealth preservation and growth. Traditional asset classes like bonds and popular stock indexes may not provide the desired returns in the face of inflation. Powell reiterates his preference for cryptocurrencies and technology stocks, stating that they will continue to outperform the rate of currency debasement. As the content concludes, it's essential to recognize that while the perspectives presented provide insights into potential future scenarios, the future remains uncertain. The dynamic interplay of technology, central bank policies, and economic forces will continue to shape the global landscape. In the quest for financial understanding and decision-making, engaging in discussions and sharing diverse perspectives becomes crucial. Everyday Americans, your thoughts on the evolving role of technology in the economy and the potential impact on job markets are valuable. Please leave your comments above to contribute to the ongoing conversation. Disclaimer: the views and opinions expressed in this content are for informational purposes only and should not be considered as financial advice. Individual circumstances vary, and it is advisable to conduct thorough research.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.